Welcome everyone to the Kendall Report. Sorry for a few minutes late. Had to reboot. There's always something, right? Anyway, it is Sunday night and a lot going on already. There's been some rumors floating around. I want to cover that up front. That Credit Suisse is about to blow up, and also Deutsche Bank. And I think they're just rumors. I'm not sure any of this is happening for real. And I think the futures were down like about 26 handles, and they've rebounded and actually were positive just a few minutes ago. I think you have to be careful. And if there's going to be a crisis and there's going to be something that blows up, you're not going to have a heads up on it before it happens. So if it's obvious, it's probably not the problem. I'm just going to stick to that. And normally that's not the case the way it goes. Even going back to 2008, no one saw Bear Stearns started the party and everything came apart back in the GFC. But the whole scenario here is just a lot of rumors. You got negative sentiment. People are looking to sell, looking to panic on the downside, and that's pretty much what you're getting. So we're getting plenty of volatility already. I'll go through all the technicals here in a few minutes. Plenty to talk about. Last week, another decline to finish off the quarter and the month. Down 2.9 on the S&P, down 24.8 on the year. NASDAQ minus 2.7. Down minus 32.4. Russell down 0.07. It was the best of the week, only down 0.25. So we're really just seeing a continuation of everything. We've traded now down into the 35 handle, and we're just continuing to be under pressure. There's nothing good going on. You'll see here in a minute further liquidation of the intermediate database. The short-term database isn't doing anything because it's basically completely blown out. Probably about 10 days ago, or 8-10 days ago, I was talking about full liquidation mode. Well, that's happened, and now we're just kind of hanging out. So let's talk about, there's plenty coming out this week. We got unemployment numbers. We got lots to talk about. I'll just kind of go through the economic stuff here first. We got ISM manufacturing coming out on Monday, 51.3. It's still in a positive mode, not in a contraction. Construction spending down -4. Anything to do with building or real estate is going to be negative right now. The factory orders on Tuesday up 0.4. Jolts coming in last time at 11.23. So we'll see if those numbers continue. I've talked about these Jolt numbers. I'm not sure they're really a real number. They are a real number, but I'm not sure they mean how they're being used. I think we live in a time, I see a lot of folks and going through a lot of statistics, trying to go through and run all kinds of weird spreads on Bloomberg and everything just to come up with some kind of negative chart that supports their narrative. And when you come down to just looking at the pure technicals, it's definitely very bearish. We're in downtrends across the point, but trying to make up all these narratives, and I guess I'll just leave it at that. I don't think there's a lot of benefit in figuring out some of those things right now. I've mentioned this, I think, the other day in a stream, that just about everything that's going on right now is above everybody's pay grade. And what I mean by that is it's very complex right now, and it's not going to be something that you and I are going to figure out very easily right now. All we can do, at least from my viewpoint, is stick with the technicals and the quantitative and see how that all plays out in the end. I don't see any bottoms in place or anything. As far as an outright panic, I don't also see us in this, I guess, panic mode. And I used to always have this favorite line I used to use, that you can't commit suicide by jumping out of the basement window. So we're definitely in the basement. How far is there another floor below where we are right now? There's certainly a possibility, but there are starting to look like there's some things that we could set up a little bit of a consolidation before there's another leg down. There's plenty to come into. And while September has a terrible reputation, October does as well. But October has ultimately, when the markets have collapsed or done something big in October, they end up to be a climactic type situation where there's a bottom. So there's more bottoms formed, I think, in October than there are any other time, at least in my recollection of only 42 years. And, by the way, I used to always announce, about my years of experience. Well, we just went through September. It is now officially 43 years I've been around these markets since 1979. Getting pretty old, still cranking though, so it's all good. Let's take a look at some of the other things coming out. On Wednesday, we've got ADP coming out. There's been some revisions to ADP. Right now, they're forecasting at 220K more jobs, and that has been the scenario, is the jobs market continues to hang in there. And actually, almost all of these metrics we're looking at, with the exception of outside of, like I said, anything to do with real estate, building, anything like that, is going to be negative right now. That's the cold spot. Everything else is hanging in there. We're looking at ISM non-manufacturing coming out on Wednesday as well. And we're just looking there at 55.5, so no contraction. Claims on Thursday, 210. We came in under 200,000 last week. Just amazing numbers. Those are some of the best numbers, the pre-19 numbers everybody likes to quote. That these are really, really good numbers. So employment continues to be there. The joke was, and somebody made the comment here in the channel, that they don't know anyone that's not out of work, and and I said I don't either. And I went by some area retail establishments, and I've never. This is a small kind of small town environment where I'm at, and I can tell you the parking lots were full. I was just like, whoa, what's going on? I'm thinking, is there a holiday coming? No, there's nothing. It was just like a regular day. So things are still moving, folks. As much as we talk about the weakening economy and everything, it's just a very mixed picture when you're out there. And I'm sure comment if you see the same thing out there. I appreciate knowing what you folks are saying. So we come into Friday. That's what everybody will be focusing in on. We got job unemployment coming out. Jobs expected to be up 238,000. Unemployment at 3.8. Then consumer credit comes out as well. Last month it was at 23.3 billion, and that's probably likely to be up. It seems to just go up every time, and so there's just a lot of positives in the economy yet. As much as I keep thinking that the employment situation is going to start to hit the wall. There's been plenty of firms out there announcing layoffs or slowing of hiring. That's not really what a recession is. We're not hiring as many this week as we did last week, so that's not a very good sign either. Probably the only thing that we're seeing out there in the markets that are starting to look kind of scary, and I won't cover it tonight, but is some of these big techs, especially Apple. Apple has been under a lot of pressure. It's trading down into some extreme fib targets that I covered last week just briefly. But the point of bringing that up is there's just a lot of these things are getting to extremes, and we're still seeing a lot of bearish sentiment out there. And sentiment has a lot to do with it, but this is possibly some of the areas that we're going to start to look at for at least some stability. Not bullish. Please don't say I'm bullish. I'm just saying we're likely to set up some sort of of sideways trading, choppy range. The markets are still seeking some kind of low in here, whether it's found one. I thought tonight's action so far was pretty impressive, especially with some of the rumors I was talking about. I think they actually got into traders. There was a fair amount of it flowing around Twitter and stuff like that. So I don't spread rumors. Nobody could state any facts. No coverage on Bloomberg or anything as everything was opening up. Hong Kong was opening up. China's closed for the week. So that's an interesting scenario. Maybe that, are they going to blow up the world? Is there going to be a major meltdown and China's closed? I think they've got Party Congress coming. So they got the big party there going on. So that'll be interesting as well. So let's just talk a little bit more about what happened last week. I think there's some things to talk about here. The whole scenario with the BOE coming in to save the British pensions, that seems to have calmed down quite a bit. Whether it's over, if there's another round, I'm not sure. British pound went down to 103 and back to 116 now, so pretty big bounce from there. We're really seeing, I think, the potential, and I am going to cover the Dow tonight because I think we're possibly in at least a near-term top, and there might be something more material. So I'll go through that tonight, and we'll look at some of the intermediate trends. Also, I'll be going into at least some of the monthly trends, see some of the things that are setting up as we come into the 1st of October here, and get some concepts and ideas so you can see market grid on a monthly basis and some of these things that are out there. Just continuing on here, we saw all of the Fed talking heads last week continue to talk about the higher rates. That's still out there, even though we saw the spike in yields and they came back in pretty, down to 370 after printing over 4% overnight one night. So, we saw everything come in, but they're still jawboning. They're still talking that story. And, the Fed's good for just keep going until they break something. So we'll see if they can break something. All of these metrics, folks, I'd like to be super negative here, but all the metrics in the economy are holding up really, really well. And I think at least here in the U.S., it's pretty solid. I know there's a lot of challenges that are coming up in Europe and different places, but here, everything appears to be pretty solid here. Everybody in America is just watching football and going to the store and buying pizza. That's what it looks like here right now. So things are a little more together. I think that as we look back on last week, the only sector was up was energy. So energy got down to an extreme. We'll go through that here in a few minutes. I think that is probably going to stabilize here. And I think the worst of the worst is out there. And the big talk with OPEC is going to cut 1 million barrels a day of production. And, wasn't it just recently somebody was trying to get them to produce more? Well, this is another confusing story here, folks, because I think originally everybody thought, well, the Russian oil's off the market. No, it's not. It's there more than ever. It's just concentrated with a few customers. And so nothing ever changed there. There's rumors of Iran getting back in the market. Who knows if that ever happens. That's just seems to be more talk than any action there. But maybe we have Iran oil coming back in. And so there's lots of supply, but this is the story that is getting harder to put together, is that it looks like maybe there is demand destruction going on, and maybe that's what pushed oil down. But I think all of that's going to stop. OPEC's got every reason to stabilize here, and most likely that's what will happen. I'll go through the crude here in a few minutes. Just looking at my notes to make sure I've got everything covered. I think I do. So let's go ahead and get into the Wavetech database and just get into tonight's broadcast. So here we go. Let me flip over. I've got it on the daily. I'll cover the short term first. It's at 7.82 bullish. We had 159 buys, 155 sells. So we're just stuck on the bottom here with virtually no symbols long. There's 1,253 symbols out of 16,030 rounding off in the total database. So not very many long. Let's flop this over to the weekly, and weekly is down to 23.95, so that dropped again. We have 1,359 sells, only 85 buys, so we're seeing the intermediate continue to fall as well. And so there's no traction, nothing, there's no reason to have any traction in the database. And it's going to take, typically when we get to this type of mode in the database, is it's going to take some time to repair it. And what has to happen is a bunch of these stocks, 16,000 of them, have to start to bottom, patterns set up so they start to be, where there's some trends that are going to start to flow. This particular database is a long only database, so right now it doesn't own anything. 3,800 symbols out of 16,060. So maybe we'll get some traction over the next few weeks. I suspect that this database will continue to decline for at least a few more weeks as we go through October, and we'll see it down into probably around 19 or maybe as low. It could get as low as 12, and that's about as extreme as it gets. So we're in an extreme market environment, so that's what I'm expecting for the decline just to go down into probably between 12 and 17%, which would be basically a full liquidation of the database. So we'll start off here with the S&P. We're looking at, so far, basically an S1, R1. The low was 35.71, S1 35.73, R1 36.29. So we printed up to 13, so a little shy of the R1 number, but we're still got a lot of downward pressure. I was saying PPM1 is a minus 0.86, minus 0.48, minus 0.35. So there's no signs of any turnaround here. If we get through S1, next level 35.43, but there's another number I want to point you to, and I've been talking about this. This number's been projected going back to 919. There's three Fibonacci projections. 37.31, we've already taken that out. Next level 35.61, got very close to that. We printed down overnight, like I said, down to 71. So we're 10 bucks off this 3,500 number. The extreme right now is 34.56. And like I said, all of the PPMs are in downtrends. There's nothing to own here, nothing to buy here from individual stocks. All the sectors are flat. Just everything is out of the markets from the standpoint of looking at any of these trends. So the trend is down. And old buddy of mine, Lou Horowitz, used to always say, he was president of the New York Futures Exchange many, many years ago. He'd always say, the trend's your friend, never too low to sell, never too high to buy. So if the trend is up, you're going to be able to buy them. But right now the trend is down, and the sellers are still going to be in control here. There could be a couple rip your face off type short covering rallies start from anywhere. I didn't look at it, but I'll just take a quick glance at the VIX 3162. In the past, buy 31, sell 20s. So we're certainly in a VIX range of being oversold and into a point where we could get those bounces. I just don't see them right now, not really seeing anything on any of the daily charts or even showing that we've actually got a bottom in. Maybe, just maybe, we get some stabilization for a couple of days, but this is going to be a week with all the news we have coming into ADP and unemployment and everything else. It's going to be, I think, pretty much a choppy week as we come through it until we get to some of these economic numbers. And everybody's got their eye on Europe right now, so that's a thing. Maybe there's some news coming out on Credit Suisse or Deutsche or somebody, but no one knows that right now. And there's no way you're going to know it. And you might be one of those said, I told you so, there's a problem. I've heard, and we've all heard, that there are problems there. Deutsche Bank's been in trouble for as long as I can think, maybe 5, 6, 7 years. So nothing's new there. It's just maybe they're coming to a head. Like I said, though, if you and I know about it, that's probably not going to be the trigger point of what's going to happen. And like I said, also, is China's closed for the whole week. So it'll be interesting. Not that it's orchestrated, but if I'm playing the conspiracy thoughts here, there's no way that they want to have all the markets open if they're going to announce something big. So, it's going to be, it's going to get interesting, folks. So just hang in there. So next we'll cover the NASDAQ. NASDAQ also down 53 handles right now. It was a little bit worse. S1, 10,934, 10,890. So we printed under S1. Next number below that is 822 and then 10,709. So these numbers are getting pretty big. On the downside, that same Fibonacci target, 10,472 is Fib target 2. So that's your next potential Fibonacci target to the downside. What's interesting about this pattern is we're still getting these mixed signals. We're still down minus 0.91, minus 0.48, minus 0.46 ppm 1, 2, and 3. And what's happening here is that ppm 2 is trying to turn up, but it doesn't have much significance since it is still very negative. And I think what I would look for today, this is going to be looking at the 11,331. And I realize, let's do a couple things here because I kind of bounced through the S&P here pretty quick. And I'm going to use both the monthly. I didn't cover the monthly. I told you I was going to do that. So I was just in a flow here. So let's go ahead and let's go back to the ES for just a second. I know we're in the middle of covering the NASDAQ, but I do want to make sure I bring that up because this is important. First of all, the weekly is, we're right on that 200-week moving average. Been talking right now is 3562, so we've come down to that number. That's going to be an important number to watch for, and we're looking at the weekly, just monster downward trends here. Now I'm going to flip over to the monthly because I want you to have the expectations for the monthly. And the one thing that is still positive on the monthly S&P, this is going to be the same on the NASDAQ, folks, is that you've still got this upward slope here on the 40-week moving average. That's at 36.98. So we're trading below that number. And we look at the downward numbers here. The low target one is 3606. We know that's been taken out. The next number on the monthly is 3146. But let's look at the monthly grid. That's what I wanted to bring this up for. S1 3493, R1 3709. I would look for at least an S1 sometime this month, and the next level is 33.72. There's no, these are very big trend numbers, and I think what we're seeing here is the rolling over of everything. The one positive thing that's happening is the 10-month is crossing over the 21, and typically that'll set up a range. If we can get back above 36.98 and maintain that, then we could see a move toward that. That would put us a move toward an R, at least an R1, 37.09, 38.30 would be the extreme. So we'll just have to play this by ear right now. I just want to make sure that we are, aware that these numbers are out there. So let's go back and let me just bring the monthly NASDAQ. So I know I commingled that, so I just forgot to cover that when I was in the S&P. But we look at the monthly numbers here on S1, 10,635 is S1 on the NASDAQ. This is a monthly graph. R1, 11,435, and the 40-month is 11,009. So that suggests if we're going to get back above there, would be a move up above R2 on a monthly. So I'll just watch how this thing sets up. All of these numbers are huge downtrend numbers. PPM1 is a minus 4.05. So this is a very, very big downtrend, and there's a substantial amount of pressure. And what this means when you get to this point is there is a ceiling, and that ceiling is probably going to be right around that 40-week moving average. Let's go top down on the Russell. This is monthly Russell. And let me put up the RTY so we can get the calcs for this month. So RTY S1 1615, we're trading 1671 right now, and R1 1724, and 1821 is that 40-period moving average. I'm going to go right now that we probably are not going to get much above R2. I don't think we get to that average. So I'm just going to call this, and probably the peak on all of these indexes are no more than R2 monthly, and probably S1, S2. I think we get a big volatile month this month. There's going to be way too much to digest to get through this. Let's go over to the daily on the Russell just to set that up. Daily Russell 1705, major resistance right there. PPM1 down minus 0.86, everything in downtrend here. Nothing positive, but just watch for maybe to set up some volatility ranges where we start to get S2, R2s on the same day. So look for volatility to kick up as we go into this month. All right, so let's go to the 10-year, and this is the daily on the 10-year. We did get an RTX sell signal that suggests that we should come back in. The 10-period moving average 370, call it 371. We got down to 368. My expectation is we'll stay above that 368 number. If we look at the market grid, it turned up coming into Monday. This is a daily chart. It came up, and we're looking at the R1 3.83, R2 3.87. Those are probably going to be your peaks. 376 to 373 should be the range that you should stay in. Let's look at the weekly. I think this is really starting, it's still in this big acceleration. And what my expectations are for the next several weeks is that we're going to go into a sideways range here on a weekly, and we'll stay below 4%, and we'll stay within the grid here and maybe get down 366 is probably going to be the low, and we shouldn't go much below that. And we're looking at R2 394, R3 402. We're just running it out, and the extreme is 401 or almost 410, not 401 but 410, 408.6. So there's still plenty of upside here, and I'm just going to flop up since we're the monthly here, since it's the beginning of the month. And we did get RXT was 372. We actually got an RXT sell signal, which suggests that we go sideways, and typically it goes in S1 no more than an S2. So S1's 365. Those are the numbers I was just talking about, 365 on the upside. R2 is 312, R1 is 395. So this is the expectations for the month. You can see here the RXT is 4.44. I don't think we get there. R3 is 4.3. Don't see that, but 412 is a possibility. 365 to 412. I think we're going to see a little bit of flatness set up with this RXT sell signal on a monthly. That suggests we get 1 to 2 months of consolidation here on the 10-year. Let's go through the Dow next. And the Dow, interesting enough, this seemed really wild. I remember when these projections were coming out. This was in May of 21. And I thought, well, we're looking at a 103 objective here on fib target, 103.95, 109, 113. Those all seemed like really outrageous numbers back in 21. You could probably go back and go through some videos that I did back then. I was talking about the Dow going up at least to 104 plus. Well, we've done all that. We've hit all the fib targets, and we're seeing that the momentum is still very high. There's still big trends. But what I would like to see is that the 10-month moving average comes into play, and that's probably going to take at least 2 months. We did not get an RXT sell signal, but I do think we, as we look at the month of October, 114, we'll call it 115 to probably around S2 109. It could even get to a point where we see some weakness down to 107, but I think we see a little bit of consolidation, because I think this is a critical level with the Dow. Everybody, I watched Bloomberg this afternoon for just a few minutes, and what I saw was everybody still talking about the Dow strength and how going back to the Asian crisis in the 90s, late 90s, and everything that happened then, and that everybody learned their lesson. They're going to defend their currency. They're going to do those things. The yen, I think I saw, was back around 145 again. So all of this stuff is trying to stabilize. And it was interesting. There was a couple of guests that came on that said they're not hedging at this level. So they're pretty confident that we're not going to go a lot higher anyway. So it's going to be interesting to watch the Dow. I think if the Dow does start to peak out and at least consolidate up here, and we're looking at maybe 2 months of consolidation up here at these higher levels. So I'll cover this as we go through the month, and I'll stay on top of this from the standpoint, because I think this is going to affect a lot of things. We know gold has a little bit of a bid, but it's really not very much to look at. I'll cover that here in a minute. But we're just seeing that the Dow is trying to put in at least a consolidation point. This is what's going on in the treasuries. It's going on in the Dow, that we should see some high-level consolidation, and we'll find out whether the old story and the old joke around the markets has been, is it distribution or consolidation? Consolidation suggests it's consolidating will go higher. into the trend. Distribution says it's the top. So we'll see how everything plays out. And I think a lot of this is going to have to do, we come into a November meeting with the Fed. There's a whole lot of stuff we're going to have to deal with. That's not until November, but still there's going to be a lot of rhetoric around this stuff. And who knows what kind of fun surprises that folks in Europe have for us. So anyway, let's move on and let's go into crude oil next. I'm going to stay with this monthly chart for a minute here because I think there's some things that we could garner from this. We're looking at the 200-month moving average here is 88.13. That's probably going to act as a ceiling to a point. We look at the configuration of the PPMs. They're trying to just stabilize here. They've still got big upward numbers here, and the downside is probably going to be around the 71 level. We look at this is monthly graph now, and so we're looking at S1 75, S2 71, S2 this month would represent a hit right on the 21-month moving average. I think we get sandwiched between the 21 and the 10. There's some monthly averages, so that'd be, we'll call it 71 to 90. I think there's some pretty good resistance, 84, 86. We'll take a look here at the weekly just to get a feel for that. So weekly's trying to turn up a little bit, but we still have some very negative PPM 1 and 2. So the 10-period moving average, 87, is dropping right now at about $1 and change in a week. So 86, 84 is going to be somewhat of a ceiling here. The 21-period moving average is trying to roll over. It's negative by 0.97. Only the 40 is up. So they're coming into this convergence where they all are going to cross over. So the shorter term averages will cross over. So that's going to ultimately supply quite a bit of overhead resistance. But I think there's also, as we were just looking at, there's major support around 71. So everything kind of confirms what I was just talking about. Next, we'll take a look at gold. What we're looking at here is a bit of a rebound. It was actually we traded down to 1622. We had a high of 1684. So as the dollar softened there a little bit, gold caught a pretty good bid as we look back on last week, and we finished at 72. So we got a bit of a reversal. And here's those PPMs again on a weekly basis trying to turn up. PPM 1 is still negative, but PPM 2 is turning up. And I think all that's indicative of is that we're locked into a trading pattern that's going to be probably, I'm just going to call it 1640 to 1704. I don't see it getting below or above those levels in this pattern. And if we get some stability, we're back into maybe setting up some kind of pattern that will end up to be a low. And maybe this is also indicative that the dollar is going to at least hesitate for a while here and potentially put in a top. I'll go through once we see a little bit more from the dollar where the turning point would be indicated. For right now, the trends are still up and there's plenty of upside bullishness on everything, as far as the dollar goes. And so that's going to keep gold in check for now. Yeah, so final market we'll cover is Bitcoin. This is probably the most amazing market. Is it had every reason to collapse and isn't. And I think the patterns that are setting up, this is a weekly Bitcoin we're looking at. Let me expand this chart just so we can get a little better view of what the ranges look like. But we just continue to, like last week we closed at 18,871. Right now we're at 19,187. We've had almost similar ranges. We just keep bouncing off of 18.5, 18.2 is rock solid bottom. Now it looks like if we can get above the 10-period moving average, 21,123, that would be huge. We still have lots of resistance between 21.2 and 20. We'll just call it 23. There's just a ceiling there for now. But the fact that we are continuing to set up this pattern here is interesting. And also the 200-period moving average is still rising, and we're very close to getting a signal to say that the 200 is going to continue to rise. So that is going to be a point to watch as well. Actually, that is at 23,461. So we're going to have to get back above that number to really get any kind of movement to the upside. Okay, folks, that's going to do the broadcast for tonight. Sorry for the slightly late start. We were able to get through things fairly quick. And as we go through the week, as we start this new month, I'll start to bring in elements of some longer-term viewpoints. We went through a lot of the monthly charts. We'll bring up the quarterly chart as we get into the week. Want to see how some of the action sets up. Those of you in the live room, please make sure that you they're on time, 1 o'clock tomorrow. And I just want to let everybody know we're starting something that we did several months ago. So if you've been on the sidelines for getting the indicators, the plan is that we're going to give you access to the live room for free for a month. And even if you can't be there when markets are live, you can go back and watch the rebroadcast and any of the videos are there. So it's basically a 2-for-1 sale. Do that because and you'll also get the opportunity to get some things that are learn some things in real-time mode from how to use the indicators. And most importantly, there is an update. I thought it was going to get out this week. I have a couple more things, but next week there's a new update. So everybody that has and that will end up with these new updates. We'll call it version 2.0 of some of these indicators. We've got some pretty exciting things I'm going to be revealing. Some of you in the live room already know some of the new details, but working on those right now. So thanks again for supporting the channel, supporting our businesses. And we are going to be starting to focus in on a lot of our institutional clients. There are people that are in drastic need of getting into an active management type situation. So we'll make sure you all know about that as we move forward as well. Thank you for watching. I will see you folks in the live room tomorrow. And if you sign up, you can get in the live room as well. Go to the link here, kendallreport.com/indicators, and we'll get all that set up. All right. Thanks a lot. Have a great evening, everyone. Good day trading tomorrow.